negative bias. But let's get straight to the first management that we have on the show. Man Industries, the stock is surging. They won an 1,850 crore order, which it says is the largest in its history. The order is expected to be completed between 12 to around 18 months. To help us out with further details, we're joined by Mr. RC Mansukhani, the chairman at Man Industries India, who joins us. Hi, Mr. Mansukhani. Good morning, and thanks a lot for joining in. First of all, congratulations. You know, in the last 2 years or so, you've seen a sharp rebound in business. So that's good news. But now the stock price has moved up. So the street would like to know, where do you go from here? Now, this 1,850 crore order, we've got the timeline by which it has to get executed, which is 12 to around 18 months. So most of it is provided. Could you tell us what is the margins on this particular order itself, 1,850 crores? And what does it do to your guidance? You know, for the year earlier, I think you were guiding for around a 20-25% growth on the top line with margins in the vicinity of around 10%. Now, will you want to upstage that?
Yeah, good morning. This order we got from international bidding and the well-reputed oil and gas company. And this is an offshore project. The offshore is a very high-end usage of the hydrocarbon sector. And this is a specialty coating where the high margins are always there because it's a very specialized field. We are expecting margin should come up because we announced earlier 10% guidelines. I am likely to improve it because this order is high value added and higher EBITDA.
Okay.
So overall average should come much higher, whatever we expected and announced. And
how much higher, sir?
Yeah, sorry.
How much higher will the margins be on this order versus your 10% guidance?
Yeah, this would be around 14 to 15% EBITDA. But we have to see the overall, whatever the year gone and what is the lead time and this material and the part of the project will be completed the current year. It will be a little bit carry forward to next year. So overall, but apart from that, we have some other good order also on hand. And overall, whatever we announce, it will be much higher.
Okay, last year, yes. So, Mr. Mansukhani, congratulations. You know, it's a really good order. If you're going to be making 14-15%, it's much better than what you're currently doing. So, given that now this order has come as a booster shot, what kind of a revenue growth can you do? I think last year you did around 3,100 crores of revenues. Now, given the kind of order book you have and with this booster shot coming in, what should the revenue number look like by the end of this year, that is FY25? And the blended margins moves up to what? Around 10.5 to 11% or even better than that?
Better than that. And first of all, the revenue, we have changed from last year 3,200 and it should be roughly 20 to 30% growth expected current year. And the next year, because of our other companies also going to start some projects, we are coming up in Jammu and some in abroad. So all will come in the 25, 26, which we are expecting 100% growth. Approximately, we are trying to achieve 100% growth in next 2 years.
All right. No, sir. I want to clear the air over here. 20 to 30% top line growth for FY25. Is that correct?
Yes.
Okay. And in FY26, I think earlier you were talking about around 6,000 crores of revenues in FY26. You're maintaining that, so it will be double of what you did in the last financial year, correct?
Yes, sir. Yes, sir. You are right.
And margins, earlier you were talking about around 10%. Now you said that the margins will be better. So give us a blended margin number. For FY25, what will it be? FY26, what will it be?
Yes, so it's very fair. Will be blended number will be 11 to 12%. And 25, 26, where we will try to maintain more than 12, average out should be 12% plus.
All right, so 26 will be 12% plus. You spoke about a couple of, projects coming on stream and that growing your business. So I just wanted your thoughts on two things. One is the stainless steel facility. When does that get commissioned? Is there a delay on that? And secondly is the emerging hydrogen transportation market. When does that start flowing into your revenue? How big is the opportunity here?
Yeah, regarding this Jammu project, stainless steel, we are expecting to start the production 25. Maybe the financial year 25, 26. In the early 25, we are expecting the work is going on. The equipment's order, some developments also there. As well as too, you are talking about the hydrogen. The hydrogen, the most important, we are comfortable to manufacture, all tested, we got the accreditation, everything. The hydrogen pipelines in worldwide little started because it's a new energy, a future energy. And we kept ourselves ready to come the more boost. Their boost will be next 1, 2 years, 3 year continuous. Depend on country to country, which country adopting first, which later on.
So for hydrogen, you are ready right now. There is nothing which has come in terms of revenue. You are looking at that as an opportunity over the next 2 to 3 years. But on stainless steel itself, you said...
No, sir. No. We participated some tender in the world market already for hydrogen. But which will come in slowly will come, and then it will be, pace will be much more higher next year onward, because a lot of countries, they are doing...
What is the size, sir? What is the size? How many tenders have you participated in? What is the order that you've won?
Yeah, right now our bid book is 1.5 billion US dollar in international market. You can say 12,000 crore approximately.
Okay. And how much of that is from green hydrogen? This hydrogen pipe that you're talking about?
Maybe 4 or 5 projects around 2,000 crore in beginning, is a beginning.
Okay, all right. And the stainless steel business that gets commissioned, the stainless steel division gets commissioned in the early part of FY26. Is that correct?
Yes, sir. And their EBITDA will be higher because we have to consolidate it. That's why the overall EBITDA will be improved.
Got it. All right. And what could you tell us? How is the debt looking in books? The finance cost, if I look at it for the last year itself, that had moved up a little bit. But you have other income as well, that corresponds to it. Finance cost for the last year was around 90 crores. You had some equity infusion as well. So you maintain that you're virtually debt-free. So explain this to us. Is this the working capital or what is it? Short-term loans?
Working capital, mostly working capital, because we are bidding in the higher amounts and higher volumes. That's why our bank guarantee charges, LC charges, ABG charges, PBG charges are high, which we are trying to control now. But because of the volume is increasing, that's why justified. There is not a very big loan on the company, although we are a cash surplus company. Still we have the cash surplus. And the net surplus in the 2024 balance sheet, and the debt is very minimal.
Right. And what about capex? Since you're speaking about higher orders coming in, higher capacities coming in, what is the capex that has been lined up for this year, and what's the plan for next year?
Yeah, the total capex through our subsidies company is around 1,400 crore. Which will be completed, which is ongoing 23 also, 24 also, and 25 will be completed, all the projects. And then yield is going to start. That's why we are announcing should be guidance is around double the revenue of 24. That's why we are announcing next 2 years.
So what is the capex for this year then? 1,400 was for 3 years together. How much is pending? Do you...
No, exposure we have taken some LCs, etc. The equipments, LCs, etc. open. And this year again will be 300, 400 crore. And our cash generation is good enough. We are not taking the new loan. But the subsidies company, they are taking loan on their own strength. And it's all the tiger.
And the stainless steel plant you said, which starts early next year, how much will that add to your revenue? What is the asset turn here?
In the first year we are trying. In the first year we are announcing 800 to 1,000 crore, the additional revenue, and as well as to some other our exposures will be around 1,000 crore, and this company will continue growth. That's why we are trying to reach 6,000 crore in next 2 years.
Got it. All right, Mr. Mansukhani, congratulations. You have come back, from difficult times in the last 8 quarters or so. We wish you all the best, and we're going to hold you to these numbers. 6,000 crores in FY26. In FY25, you're guiding for a 20 to 30% growth with margins upscaling from current levels. Thanks a lot for joining in.
Thanks.
Well, for the time being, we slip into a short break on the other side.